The following program sponsored by Adams Financial Concepts.
About money, a different approach to investing you won't hear anywhere else. Your host, Mike Adams, is a registered investment advisor and works with investment portfolios exceeding over $100,000 in net worth, and has a proven track record of managing long-term investments surpassing the markets in the long term. The information shared on the following program is for educational purposes only, and any investment advice given may not be suitable for all investors. And now, here's Mike.
It's Friday, and we're going to be talking about money. You know, every May I go to a conference. It's put on. There's about 2,000 of my closest friends. I mean, it's one of those where they talk to investors, they talk to financial advisors. There's 100 or so newsletter writers that are there, and it's been a program that's not just in Las Vegas and San Francisco, Orlando. It's all over the country. They put these conferences on. And as I was thinking about that, as I was signing up for that this week, I kept thinking about two exhibitors or two rows of exhibitors. You've been to the home show or to the boat show or to one of the trade shows where you have these rows upon rows of exhibitors, and they're all there to explain what they're doing. And in a conference like this, they're there to tell you how much money you can make and how wonderful they are. And if you're a financial advisor, they'll tell you how much your commissions are. I mean, it's all really nice. And I was thinking, the last few years, there have been a couple rows of oil and gas exploration people. And they talk about the income you can get, the capital gains you can get. They never talk about the complete losses you can take. But I guess that's another subject. And it's one of those things where you walk down, and each time I would walk down the row, I would ask people where their break-even point was, and they were so confident. Their break-even point was at $75 or $95 a barrel of oil. And I ask each time, and I have been asking for the last couple of years, what happens if the price of oil drops below $75 or drops below $90? They were all confident that it would never, ever happen. Never, ever happen. You know, Investment News came out with an article this week talking about a wave of FINRA arbitration claims. People that have lost money, they've filed arbitration. They talked about Lee Nelson, who was 63 years old, feels that he'll never retire. 90% of what he had was concentrated in oil and gas. He needed income, and oil and gas is sold on the basis of income. It's pulled up out of the ground. It's going to produce income. And his financial advisor put him 90% into oil and gas. Clint Mazzioni sold his business, and the broker invested most of the $1.2 million that he had into oil and gas. And not only that, he invested in things like Lynn Energy, which filed for Chapter 11. Not only that, he did it on margin so that he had to sell things in the 401k because the margin calls came. Those were just two of the stories, but it illustrates what's gone on. Master limited partnerships, it's a structured product. I talk about structured products every so often. They're built really for the benefit, very often for the benefit of Wall Street. Wall Street makes a lot of fees. Financial advisors make a lot of fees. These things pay really nice fees. They supposedly pay a lot of income to the investors, and some do. There's some that continue to pay, some that continue to work well, return capital gains. But anytime you're looking at something where the yields are significantly higher, very much significantly higher, you also have to feel that you're taking a much greater risk. People are finding that out. And I believe that these stories that were coming up, people were happy with the yields they were getting. They were happy with the income. You know, but it's devastating when the losses come. It doesn't have to be. This has been a time in which income has been very difficult. But if you look at the concept of total yield in a portfolio, it's not been a bad time. You look at the total yield, and by that I mean you invest for gains, and you have to trim the portfolio every so often and take some of the gains off the table, and that becomes the income. It works. I've been doing that for a long time. But when you begin to focus on things that are yielding a lot of money simply as an income play, you're looking at something that can go away. You know, the other exhibitor that you see at these trade shows are the trading booths. They teach you how to trade, how to day trade, or how to trade short term. And you hear the same thing on CNBC. Actually, there's a couple guys that are selling a book on options, and if you're one of the first 100, you get a free book. Now, they've been saying that for over a year. So does that mean that they've had fewer than 100 people in a year that have subscribed to the book? Or is it simply that they're giving away the book? It reminds me one time when I had a cold call at my house, and there was a young woman on the other end of the line. I assume she was young. She had a young voice. And she said they had a special thing going on, that if I could give the correct answer, I could have a family portrait done at the studio for $14.95. So I said, okay, what is the question? What's the thing? Can you tell me which of these three presidents was not assassinated? Okay. Lincoln, Kennedy, or Roosevelt? So, I'm always mean. I'm sorry I'm mean, but I said, Kennedy. There was a pause at the other end of the line, and she said, well, try another guess. So I said, Lincoln. There was a longer pause this time, and then she said, you really tried hard, so we're going to give you the $14.95. I asked her, I said, you knew you were going to give me $14.95 offer anyway. Why didn't you just offer that to begin with? But those are the kinds of things that are going on in these giving away an options book. If you're the first 100, after a couple months, they should change it, or they should offer the book for $1, or they should do something. It begins to take on a question of credibility. But I didn't start there. I started with the exhibitors on the floor of this convention, and they talk to you about, and they have testimonials of people who have made money. And I'm convinced that they're true. I'm convinced that people actually do make money, or some people have made money doing these trades. You hear that again and again. But the question is not, do they make money? The question is, how do they stack up compared to the market? Jack Bogle, who started Vanguard Funds, has said that in his 50 years of being in the business, that he's never known anyone, nor has he ever known anyone who knew anyone who was a trader who outperformed the market. Dalbar's a company that does research, and they look at investments and they look at a lot of things. But they've been doing a study for 30 years now, looking at the average performance, or the performance of the average mutual fund investor. And over the last 30 years, if you'd started 30 years ago for this Dalbar report, and now it's a year old, but if you'd looked at it before, if you'd started with $100,000 and invested in stock mutual funds, the average mutual fund investor would have grown his $100,000 to $286,000, which seems pretty nice, right? It's almost a triple in that period of time. Seems really good. And looking back at these exhibitors, maybe that's what they're looking at as well. They grew $100,000 to $300,000. But you know what? Dalbar said if you just invested in an index fund, and they didn't have index funds at that time, but if you'd invested in the Standard & Poor's 500, that $100,000 would have grown to $2.1 million. Not $286,000, but $2.1 million. So what was left on the table was nearly $1 million by being an average mutual fund investor, by switching from one fund to another fund, by trying to catch the hot funds, by trying to focus on where things were going. You give up. And on those trading platforms, I'm almost sure that those people, that they had testimonials, actually did make money. But compared to how they would have done by just investing long term, probably not. Probably not. They probably left a lot of money on the table as well. There have been studies that have shown that buying long term is the best approach to the market. And I don't mean a buy and hold. People talk about buy and hold being dead, and I believe that that's also really true. But there are studies that show by being invested and staying invested and not trying to time the market, that people do better. Now we're coming up to a commercial break. I don't want you to go away because I'm going to talk about one of those studies. I'm going to talk about some of the other things that are involved. I've got two great guests today. You got to hear what they have to say. It's fascinating. You'll be interested. And if you like what you're hearing, we have a blog on adamsfinancialconcepts.com. You can go on that and get further depth into some of these subjects that I'm talking about. So check that out. And it's time for the break. I'll be right back.
About Money with Mike Adams will resume in a moment on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our clients' interests first in all portfolio decisions.
If you're looking for a home for your seven-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
Now we return to About Money. There's more information waiting for you at adamsfinancialconcepts.com. Here again is your host, Mike Adams.
So I was talking about a conference that I go to every year. It's a conference in May. And during the trading stations, they talk to you about being a tactical investor. That means that you call the bottoms, you call the tops, you call when to buy, when to sell. Because they say, and they're right, that buy and hold doesn't work anymore. When you think about what's happened, just look at what was in the Dow at 50 years ago. You had Dow stocks that were Anaconda Copper, American Can, American Tobacco, Bethlehem Steel, Chrysler, General Foods, Goodyear, Johns Manville, Owens, Illinois, Swift & Company, Texas Corporation, Union Carbide, U.S. Steel, Westinghouse Electric, Woolworth. That was half the Dow, and they're gone, completely gone in 50 years. But think about the other side of that. Think about the companies that did not even exist in 1966. You had Microsoft and Intel, Southwest Bell, Home Depot. Microsoft came public in 1966. Walmart, United Healthcare. Nike actually formed in 1964, didn't come public until 1980. That was when their IPO was. Those are all new companies that essentially didn't exist. Two of them existed in 1966, but they were just beginning. So the question is, can you buy and sell on a short-term basis? I don't believe so. Jack Bogle said it, and I said before in the previous program that in his 50 years of experience, he's never known of anyone, nor does he know anyone who's known anyone who has taken a tactical strategy and beaten the market. And yet today, it's a major theme since 2008, when a lot of financial advisors, when a lot of investors saw their investments go down. And they just had this thought, if I could have stopped the bleeding, I'd be much better off today. You know, John Vanderheiden and Peter Lynch of Fidelity did a study, and they looked at a period of time from 1981 to 1991, and they said, if you would have missed just the 10 best trading days out of 10 years, that's not 10 per year, that's an average of 1 day per year, the best 10 trading days, your returns would have dropped from an average of 14%, which they were between 1981 and 1991. From 14%, they would have dropped to 4% just by missing an average of 1 trading day per year. Carla Freed put the same results in Money Magazine in 2007 before the splashdown in 2008. And she found essentially the same results, that the Standard & Poor's was up 11.8% during the 1982 to 2001 time period. She looked at $100,000 would have grown to $937,000. But if you missed just the best 10 days, 1 day every other year, that 937 instead would have been 560,000. If you missed just a day and a half, the best 30 days, it would have dropped to 281,000. Missed the best 50 days, it would have dropped to 157,000. Very, very significant thing, just by being out of the market and missing the best trading days, just the very best days. And there have been studies that have shown that if you can miss the worst days, you can do much, much better. The question is, how do you know what are going to be the best days, and how do you know what are going to be the worst days? You don't know. You can't call it. It's one of those things where being out of the market is a greater risk than being in the market. And for all those players, all those exhibits that they talk about, how you can make so much money and look at this person and this person and this person, you know, they didn't do as well as the index funds. They may have more fun, and I do know people who enjoy immensely trading on a regular basis. But that's like going to Las Vegas. Not that Las Vegas is a bigger gamble, but it is one of those things where you bet and you enjoy. It's a form of entertainment. It's not a form of making a fortune, unless you're very, very lucky. But it's also very difficult. R.W. Baird did a study a couple years ago showing the average mutual fund, which had over a period of 10 years averaged 1% better than the average of the Standard & Poor's. In other words, if every year was the same, they would have been at least 1% better. Now, they weren't every year, because over that 10-year time period, 100% of those mutual funds underperformed at least 1 year, and 85% underperformed 3 years. 25% underperformed by 5% or more during a period of 3 years. So you put yourself in the position of a financial advisor or of an investor, and you're looking at your fund. Everyone else is up, everyone else is down, and you're down. You begin to think you need to change. And you do change. And you tumble back to what Dalbar found is the average mutual fund investor over a period of 30 years turned 100,000 into 286,000. Investing just in the Standard & Poor's 500 would have been 2.1 million. It's a very big difference. It's hard to do. It's hard to know what to do. There's two sayings. One, and I believe they're both true. One says, don't put all your eggs in the basket. In other words, to diversify your holdings. And the other one says put all your eggs in one basket and watch the basket. It's a question of concentration. The more you know about the individual securities, the more you know about your investments, the better off you are to concentrate your portfolios. There have been any number, hundreds of studies that have been done. None had been done, only one had been done prior to 2000, one back in 1978. But several hundred have been done since 2000 showing that putting your eggs in one basket, but knowing what you're investing in, will yield better returns. But if you're not knowledgeable, if you're not completely understanding, it's better to diversify and not get caught up with 90% of your investments in oil and gas. That's the beginning of today's program. I want to change. I want to introduce my two guests today. They're from Garrigan Lyman Group. It happens to be Tim Garrigan and Rebecca Lyman. So welcome to the program, Tim and Rebecca.
Hi, Mike.
Thank you so much.
So why don't we start with your backgrounds? Rebecca, why don't we start with your background?
Sure. My background is with Pepsi-Cola back on the East Coast, marketing and advertising and big events and video production. And then I moved out here just in time for the Goodwill Games in 1990, and where I worked for Turner Broadcasting and met Tim.
And Tim, why don't we start and let's go with your background.
Sure, Mike. So I have a television background, broadcast television, first in programming, then in public affairs, then in news, and then and doing a lot of content creation for television. Went from Cairo TV here to MTV in New York, created 4 shows there. Met Rebecca at the Goodwill Games, working for Turner, and from there we got done with Goodwill Games and enjoyed working together and started our company.
And the company has grown significantly since then.
It has. We started in the Pike Place market, just the two of us, in 1993. And just 2 folks, we invested quite a bit of money, of our own money, to start the company as a marketing, events, film and video agency back in 1993, which was really cutting edge at the time. And we didn't take a salary for 6 months and hoped the phone would ring, and it did. And we've grown it from 2 people in the Pike Place market to about 130 people now, and we're in Seattle and Boise and in Manhattan.
So it's kind of an interesting story how you got to Pike Place market. So why don't you tell us?
Well, sure. Tim and I we've been freelancing out of our cars and out of the first Starbucks down in the Pike Place market, and we decided that we were going to open an office. And I'm like, oh, overhead, Tim, I don't know. And he said, and we talked about it for a while. I said, okay. And I said, where would you like to have our offices, do you think? He said, well, I've always looked at the Pike Place market. I thought it would be a really fun place to have an office. And I said, well, I saw a for lease sign on the corner of First and Pike when I drove in. And we walked across to the Market Association, and sure enough, that space on the corner of the market had just come up for lease that day, and it hadn't been for lease in 11 years.
But it is also a space that you looked at before.
Well, yes, so that's a good point, Mike. So when I was at Cairo, I would go to Pike Place Flowers there on First and Pike. On that corner, I'd be buying flowers after a workout. It was somebody's birthday in the newsroom or some special event. And I would look across that way there and see those offices and think, wow, that's pretty cool. I wonder who gets to work up there. And that was probably 8 or 9 years before Rebecca and I had that conversation.
And there you ended up.
Yes.
But you're not there anymore.
No, 5th and Pine now. So we're across from the old Nordstrom and the new Nordstrom. And so the Gap has the bottom 2 floors, and we have the top 2 floors of a 4-story building.
Awesome. We're coming up to a commercial break, but we're going to come back after the commercial break, and we're going to talk about the company and what you do and how you can be a service to some of our listeners. So don't go away. We've got a lot more to come. And I also want to talk about some of the things that are coming and some of the companies which may not be in existence today, which may be in the Dow in not too distant future. So don't go away. We've got a lot more to talk about.
More About Money coming up with Mike Adams on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Creating and maintaining wealth has been the specialty of Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
About Money continues. Remember the website adamsfinancialconcepts.com. Here's Mike.
So I'm here with Tim Garrigan and Rebecca Lyman of Garrigan Lyman. So let's talk about Garrigan Lyman. Tell us about the company and what they do.
Well, now, 23 years later, we're a strategic digital agency. What does that mean, Mike? Well, it means that we're fortunate enough to be working in marketing and advertising and thinking about it in new ways because the whole world has gone digital. People are looking at their phones. They have iPads. They've cut the cable. They're looking at video content on their desktop. And whatever that is, it's still a digital device, a digital medium. And so that's where people are. And we're focusing brands and brand experiences on a great digital experience to really help a client, a customer, a product come to life and engage in audiences, whether it's in social or through search or through advertising or marketing to help them reach their business goals.
You know, it used to be, Mike, that a brand was broadcast only, literally in some ways, but the brand would talk to the audience as a group, as a crowd. And now it's really a one-to-one engagement. A brand has to talk to you, and it has to talk to your wife and your daughter. It has to talk to individuals and give them what they need in the place where they need it, at the time they need it, and the topics they need it. Similar to your advertising you were talking before, where the same first 100 people got the book for free, right? They needed fresh content, right? It's all about the content you deliver at the right time.
So how do you do that? I mean, you know, I think of traditional TV where they broadcast the message, but it's the same message, it would seem. So how do you make a brand work?
We have to really understand your target audiences, right? You have to really understand who you're talking to, who are the different people you're talking to, and you have to find them where they live. So we layer research tools, all types of big data on top of our brand to see where that sweet spot is for the brand and how to find the audiences and communicate with them in the way in which they would like to be communicated with the content that appeals to them.
You know, we told you we had 130 people, and really they're made up of strategists, storytellers, and innovators. The strategists are looking at the data, the research, the digital tools we have to come up with an insight that could be, to Rebecca's point, who those audiences are, where they're consuming content, where they're engaged in a conversation, how we can engage with them. And from there, that insight then drives a great creative strategy. That could be a website. It could be a wonderful experience on a website. And then it's how do we drive people to that website using all the great digital and marketing and advertising tools that we have. And then we have the innovators who are actually the developers and the technologists who are bringing this to life in a way that works on any device, on an enterprise level or down to one device, a phone, whatever it be.
You know, we live in an age where more and more people are searching for information rather than just listening to it. And so how do you go about getting a brand through in that aspect?
Absolutely. Well, we do a lot of search marketing, both organic search as well as paid search. And it's very important to make sure that your content is optimized for what people are looking for. And so we devise search programs for our clients that have a content marketing concept behind them. So we understand the search terms that people are looking for and how to put our client, our brand in front of those folks.
You know, really, really fun is that Bobble Tennis out of Lyon, France is one of our clients. We're the global social agency for them as well as their digital agency of record. And Rebecca and her creative team just took one of the players that uses Bobble tennis rackets, a pro player, Jack Sox. He's from the U.S. And she's got a campaign running called Jack Sox for President. He's running for president, and along with everybody else in the field. And over the next 4 or 5 months, you're going to see this campaign unfold where people can get on the bandwagon with Jack Sox for president.
Interesting.
And his platform is Connected Tennis. So his platform is about digital in tennis.
You know, I heard the statistics one time not too long ago that something like 97% of the people will search on the internet before they make a decision to buy.
Mm-hmm.
Yes.
It's enormous.
Enormous, absolutely.
And so the impact you can have is enormous. But if you're missing that aspect of your business, you're missing customers.
Yes.
And if you're not innovating today, you're going away. And what I mentioned earlier, half the Dow went away in the last 50 years. Mm-hmm. And a lot of that was a lack of innovation, a lack of understanding.
Well, honestly, we feel like we have to reinvent our business almost every day at this point because there's so many new technologies that are coming in. There's so many new ways to market. And our clients, you know, they have so many choices. They have so many choices in the way they can reach their customers. They have to be smart about, nobody can do everything. They have to be smart about what selections they make in order to reach their customers.
So let's talk about some of your clients, of large, small, in between. What's your typical customer, or do you have a typical customer? Does it range from large to small?
It does. It really does. It ranges. Everybody has a different business objective. They have different competitive issues. They have different market challenges. And so what we're skilled at is listening and understanding what our client is trying to achieve. And then from there, figuring out a way to help them reach their goals. Our clients can be as small as, name a small one, Rebecca.
Savor Seattle Tours here in Seattle. Fabulous client, does tours of the Pike Place Market, food tours, alcohol, craft drink tours. Great client. We're rebuilding her website right now for her, and really wanting to reach her customer, who is, many of them are coming to Seattle for the first time, so we need to get in front of them. And she offers a broad range of tours, so we're creating a decision-making tool to help clients really understand the kinds of tours they could get and who should go on them.
We mentioned Bobble Tennis. We also have Philips Healthcare, which is headquartered in the Netherlands. We have great clients at Philips that are in Bothell. We also have Pearl Izumi out of Colorado. We have Quorum, which makes software for the oil and gas industry. We have Avaya, which is a telecommunications company.
T-Mobile.
And T-Mobile.
From large to small, then.
Uh-huh. Yes.
So, and the process, if I were to come to you and say that we needed to employ you to do service, what would be the process?
Well, we would say, sure, we'd love to talk to you. Come on in. And we would ask you a series of questions to understand what it is your pain is, what you're trying to achieve, where you want to go. And then from there, try to understand how we could best get you to what you want to achieve with the budget you have in mind. And these days, you don't need a huge advertising budget because it's not on television necessarily anymore. It could be 5 seconds, what we call pre-roll. It could be a 5-second video ad on Hulu before you watch your content. Or it could be a social strategy with a great destination for people to engage in a conversation with the brand in a social platform. And it could be a website that can be a few pages, or in some cases like Rick Steves. Probably a lot of your listeners know Rick Steves. We took his site that had thousands and thousands of pages down to probably,
I think, a quarter of the number of pages, but really searchable, and a whole content strategy around the pages to make sure that people can really find what they needed.
So how would somebody get a hold of you? Somebody that's listening today?
Oh, good question. Thank you, Mike. Well, one place to find us is on the web at glg.com. glg.com. We've been around long enough to have a 3-letter URL, so we're very happy about that. And then the 206-223-5548.
Say that again.
206-223-5548.
And say the website again.
It's glg.com.
So anyway, if you're listening and you have a need, and if you want to upgrade your business, do contact them, because I think they've got a great story and a great business. So thanks for being on the radio.
Thank you, Mike.
Thank you, Mike.
And if you'd like to know more about some of the stories you're hearing today, we have a blog that will be on the radio that will go into more detail. We have information on the website that will give you much more information on what's going on. And don't go away, because after the break, I'm going to come back and talk about some of the companies that don't exist today, which could exist in the not too distant future. So don't go away. I'll be right back.
Stay tuned. About Money returns in a moment with Mike Adams here on Business Radio 1300 KKOL. For more information, click on adamsfinancialconcepts.com.
Lots of people manage investment portfolios. Just a few can manage a successful portfolio and provide exceedingly great service to their clients. Here's Mike Adams from Adams Financial Concepts.
We believe the price you pay should be based on the performance of your portfolio and the quality of service you receive.
You know, Mike, it seems that a lot of companies subscribe to the one-size-fits-all mentality of investing. Does one size really fit all?
Not with us. Every portfolio that we manage is customized to fit each particular client's objectives and risk tolerance. We place our client's interests first in all portfolio decisions.
If you're looking for a home for your 7-figure plus investment portfolio, call Mike Adams of Adams Financial Concepts, specializing in creating and maintaining wealth for over 20 years. 206-903-1019. That's 206-903-1019. Or log on to adamsfinancialconcepts.com.
We're back with more About Money. For details on what you hear on today's show, visit adamsfinancialconcepts.com. Now, here again is Mike Adams.
So I started talking about some of the changes that are going on, and buy and hold doesn't work anymore. I talked about the companies 50 years ago that were part of the Dow that no longer are. The Anaconda Copper, American Kin, American Tobacco, Bethlehem Steel, U.S. Steel, Union Carbide, Johns Manville. You know, those companies disappeared. Half of the Dow disappeared in the last 50 years, and many of those companies don't exist anymore. And today there's firms that didn't exist in 1966, didn't exist 50 years ago, the Microsofts, the Intels, the Walmarts, and the companies that have come up. There's small companies. Apple didn't exist, Qualcomm, Amgen, Genentech. I think of the companies that didn't exist when those companies in 1966 were part of the Dow. Things are changing faster and faster. McKinsey and Company did a study and showed, and this study goes back to 2007, but they showed that by 2007, the turnover in leadership companies was happening 3 times faster in 2007 than it was happening in 1977. 3 times faster. I build things around a portfolio. When I build a portfolio, I build it around a theme. Before 2000, I built around a theme of the 19th century was the century of chemistry with steel and aluminum. The 20th century was the century of physics with electricity, with the internal combustion engine. It was the time of physics. Computers were physics. The 21st century, I said, was the century of biology. And many of the companies which we're going to be seeing are growing out of bioengineering. You know, right now my portfolio is early in the 2000s it was don't get caught by a credit crunch. Now it's the times they are changing, and they are changing. It's not a time for buy and hold, but it's a time to find those companies which are going to be incredible growth companies. There's a book that was written, Regenesis, How Synthetic Biology Will Reinvent Nature and Ourselves. It's written by Regis and Church. They talked about computers as being universal machines, being the types of machines that can really change and use a lot of data and apply a lot of data. They can apply that to biological orgasms, and biological orgasms which can do so many things. One of the guests on my program was Blue Marble. Think about Blue Marble. Blue Marble was a company that took the bacteria from the stomach of a whale which consumes plankton and things in the ocean. They combined it with the bacteria of a cow, from the stomach of a cow, which consumes grass and grains, and they're able to produce petroleum products in a couple days. It took bacteria millions of years to create the oil that's in the earth, but we're reaching the point now where we're beginning to create petroleum products in days. Not millions of years, but days. You know, in 2005, Mohawk Industries introduced what they called the Smart Strand carpet line. It was based on DuPont's Sonora. DuPont Sonora was made from a natural occurring sugar and readily available. And it was a petroleum product, actually, that was a crystalline, and it had a spring to it. So when you walked on the carpet came back to the shape it was in. It was like a spring. Gencor came along. Gencor was a biotech company, bioengineering company, and they took the DNA from 3 organisms, stitched them together. They made a new bacteria, one that didn't exist before. They made 26 genetic changes in this bacteria, and that bacteria produced a product called 1,3-PDO. What normally existed in petroleum products was now being produced by a new bacteria which didn't exist before. It was like a kink in the middle, and it produced this product in a fermenting barrel. It produced it by converting glucose from corn to the PDO. And they did it in a fermenting barrel, much in the same way as making beer. So think about it, petroleum-based, and it became biodegradable. And for every 7 yards of Smart Strand that they're selling, it's enough energy and emissions to replace 1 gallon of gasoline. They're selling enough now to replace 10 million gallons of gasoline per year. Think about the impact of that on climate warming, on global warming, on the environment, it's biodegradable. There's a number of small companies that are using microbes. You know, there's a couple guys out of Penn State, professors at Penn State, that have taken some bacteria and they've made essentially a battery. They have an anode and a cathode end. They pour into a cylinder wastewater. Just like we have wastewater plants, they pour wastewater. And they've engineered a bacteria to make a microbial fuel cell, because bacteria, when they're growing, emit electricity. So what they're doing is they're cleaning wastewater and at the same time producing electricity. Think about that. You know, it's not economical today, but think about the potential when you can have that in wastewater plants and produce electricity, so that you're not only cleaning up the water, you're consuming all that with bacteria that are going to produce electricity as a byproduct. That's pretty phenomenal. Those are things that are being bioengineered, and they're coming. It's the 21st century is the century of biology. They're producing plastic cups by engineering bacteria. They're producing, one person feels that he can produce an entire house. He hasn't done that yet, but that's his objective, is to eventually grow a house using bacterial products. We'll see. Maybe he'll do it. You know, in January of 2009, Continental flew a 737 from Houston, flew it to New York using one engine, which had 50% conventional biofuel, or conventional fuel, and 50% biofuel. Virgin Atlantic has done that. Qantas has done that. People are looking at replacing petroleum fuel with bioproduced fuel. There's a tremendous promise. We haven't reached the point where things are economical yet, but give it a little time, and time is going to be there. And some of those companies may be the billion-dollar companies of tomorrow. It's not a time of buy and hold, but it's a time of finding those companies that are going to be great in the future. Finding those companies is what it's going to be all about. Anyway, if you missed any part of this program, you can find it within the next week on our website. We do a podcast. We'll have more details in a blog about this program. Just check us out, adamsfinancialconcepts.com, and we will be back next week.
You've been listening to About Money with Mike Adams, a registered investment advisor. If you'd like more information about what you heard today, or about Mike's investment philosophy and strategy, or if you want Mike to evaluate your own portfolio, click on adamsfinancialconcepts.com. That's adamsfinancialconcepts.com. The information shared on the preceding program was for educational purposes only, and any investment advice given may not be suitable for all investors. Join us again next Friday afternoon at 3 for more About Money with Mike Adams, here on Business Radio 1300 KKOL.
The preceding program was sponsored by Adams Financial Concepts. Creating and maintaining wealth. Adams Financial Concepts for over 20 years. Every portfolio managed by Adams Financial Concepts is customized to fit each particular client's objectives and risk tolerance. The client's interest always comes first in portfolio decisions. Call Mike Adams today at 206-903-1019 or log on to adamsfinancialconcepts.com to check out their AFC performance. They welcome your review. That's adamsfinancialconcepts.com.
Your business leader for Seattle is 1300 KKOL.
Hey, wake up. You can't dream your way into college. There are actual steps you need to take, steps that go beyond just getting good grades. So if you're serious about college, visit knowhowtogo.org today. Brought to you by the American Council on Education, Lumina Foundation for Education.